Hi, this is Kerry Artag with Wicked Stocks bringing you the daily Tesla report for Tuesday, July 25th, 2023. Before I jump into the charts, just want to encourage you to please click like if you would. Please become a Wicked Stocks YouTube channel subscriber. Share the content if you would with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those underlying stocks. WickedStocks.com also offers a 5-day a 5-day free trial. And so you enter the payment gateway, you're given 5 days to check it out, see if you like it. If you don't like it, you can bow out, cancel your subscription at no cost to you whatsoever. So check out wickedstocks.com. So here we are, going to take a look at the big picture first and work our way into the day itself. Last week, these are updated weekly charts. Last week, we did push through this channel top that is projected off the January low, and this is a full 6 months in the making. We pushed through that long-term line study last week, even closed above it on a daily basis, only to fall back late last week to close clearly below it. It is the weekly settlement above long-term line studies, ideally by a 1% margin. That is the primary basis of a long-term buy or sell signal. It is on an intra-week basis. Daily settlements are tentative, but you're really waiting for that weekly settlement. Also, last week, we put out a key reversal high. That is a sign of weakness, but of course, Monday's comeback puts all of that into question in terms of anticipating bearish trade based on the key reversal high from last week. I'll also mention, and I know you're well aware, that we also settled last Friday just below this 263.15 rising channel bottom. Now, I will also mention, and if you've been following this day to day, you know there's been a projected 1/3 speed line off that late April low. That's actually contained the selling pressure so far today. So obviously, in hindsight, as a technician, I skew toward channel formations more so than speed lines, but by a degree. And in hindsight, I could have called this a range of support that starts at 263.15, that channel bottom, and ends at 257.37, the speed line. But as you can see in the support resistance here on the far right, I'm putting it all on 257.37 now. That is the sell signal that, if settled below, should present a bearish trade as we move into August trade, the next 3 to 5 weeks, then anticipating this 199.32 channel bottom that becomes indicated below 257.37. Now, the week is young. Yes, we have a key reversal high on the weekly chart. We're back above the low of that high. In other words, the 265.10 level. I'm not going to get into that right now, but I will say, and this is really the day itself, 263.15 intraday support. If we break or open below 263.15, we retest 257.37 today, where we can bottom out for the week, quite possibly well into August trade. From here, we can rally back into the low 290s, the 290.33 formation in reach again over the next week or two, holding above 257.37. And holding above 263.15 actually maintains, I'd call this a buoyant dynamic for the day, the market kind of wanting to recover. I do have a minor intraday resistance level at 271.37. 271.37, nothing more than an upside 3/8 Fibonacci over the last 1, 2, 3, 4 trading days. The extremes over the last week of trade, 271.37 intraday resistance upside. Once again, I've got the 263.15 level downside as our intraday support. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. 271.37 upside. If we happen to push or open today above 271.37, we should test 280.04. And this 2-week channel bottom is respectable in its ability to contain daily buying pressures. We might even fall off of here for a day or two. Back to, what is it? The 263.15 level, possibly to 257.37. So yes, I'll say that again. Once we test 280.04, 3 to 5 day swing traders may actually play the short side. I say that very cautiously because this market can fall off from 280.04 into later week. If we tested today, Tuesday, we could certainly by Friday's close fall all the way back into this support area that really the base of which is 257.37. Now, overall, holding above 257.37 will keep the low 290s in reach, that 290.33 channel top I mentioned a moment ago, by the end of next week, I would say. And if we were to close today above 280.04, we should reach 290.33 within just another day or two of trade. And this is still a meaningful and legitimate channel top. Despite the fact that we stretched through this area significantly last week, it is still the formation, in my opinion, to settle above by a 1% margin for setting off that secondary buy signal as we move into August, September, and October. The following 3 to 5 months then likely to reach this 414.49 November 21 all-time high. As I've said, though, before, a settlement that we had a couple of months ago above this 185.55 channel top does carry with it longer term a retest of the 414.49 all-time high anyway. The question is whether it will be, by the middle of next year or by the end of this year. And it is the latter if we were to close sooner than later above this 290.33 channel top by the required 1% margin. So once again, I'm going to go back to this chart here. 257.37 is our, I'm going to just call it our new revised base of support. It can contain selling on a weekly basis. I'm not crazy as I'm looking at this right now, considering this still a 4-star support. Why I still show it as a 4-star support, it's a multi-week level. My 4-star levels are multi-week, meaning I don't expect to bottom out here at 257.37 on a 3 to 4 week basis. A 1 to 2 week basis, yes, back to 290.33 as I'd mentioned already, but it would be a settlement below 257.37. I think that does carry with it a multi-week sell signal. 199.32 channel support, then consider a 3 to 5 week objective where we could actually bottom out in combination with that 188.47 area through the rest of the year. And so there's that. So I'm going to go back to this chart here, intraday support 263.15. Above which 271.37 in reach today, this 3/8 Fibonacci, pushing or opening above 271.37 signals 280.04 where a daily high can be placed, and quite possibly into later week we could fall off from here, closing above 284. Expect the 290.33 long-term 4-star resistance level within just another day or two of trade. Now for the downside, once again, if we happen to break or open below 263.15, expect 257.37 intraday, where we can bottom out for the week itself, possibly through next week, and above 257.37, 290.33 remains in reach by the end of next week. Once again, closing below 257.37, good high through August, anticipating 199.32 over the following 3 to 5 weeks. I could elaborate on options trades, but I think that kind of goes with the territory. Closing below 257.37, you could buy 200 out of the money puts that don't expire for at least a couple of months. Holding above 257.37, oops, sorry about that. Holding above 257.37, it really is that long-term channel top at 290.33 that remains a 1 to 2 week objective. So once again, holding above 257.37, you could reach for 290 out of the money calls that don't expire for at least a couple of weeks. Very short term here. I really wouldn't advise, if you will, buying a far out of the money calls on a longer term basis, at least at this stage, unless we were to close this week above 290.33 by the required 1% margin, a Friday settlement of 293.23, and then I think, sure, you can reach for those 415 out of the money calls that don't expire for at least 6 months. I'm going to leave it at that for Tuesday's Tesla. I'll be back tomorrow, of course, with Wednesdays. Thanks for watching, and check out wickedstocks.com.